Hey guys, Mike here. So another busy day in the market, and I got a boatload of information in this video for you because we got a big report coming out tomorrow, something the Fed love to look at. So if you want rate cuts this year of any kind, this is what needs to come in line, or at least under for sure. And if it does, you can see a big move in the market tomorrow. So we'll talk about that. We got a lot of news coming out tomorrow. We had a lot of economic news come out today, right? Which is why you saw a whole lot of volatility pre-market and after the market opened and stuff for sure. There were a couple sectors that were absolutely on fire. Yields dropped like 1.5% when the economic data came out. So we're going to go into those sectors as well and a few other stocks. And there's one portion in here real quick. I'm going to get you to actually answer a question for me because I'm curious what you got of this, because you know I like the real information, right? Like, you're real people, I'm real people. Let's hear it instead of just saying, well, this survey said, and the survey might surprise you. And I'll share what I'm doing as well on that, to be fully transparent. But look, it's this simple. With all the GDP data and stuff we had coming out today, what's the economy doing? The economy is slowing. GDP, what do we got going on? When it comes to employment, everything else, it's slowing down, guys. We know this, right? The economy is slowing down. This is what happens. The only thing that has kept us afloat so far is, I don't know if you saw today, the money market funds increased again. And so still that trillions of dollars they flooded out in the economy, and the free checks and all the stimulus and all that stuff, you know, it's still out there. They're still trying to get out. It's just a slow deal. The one thing that's concerning to me, and I definitely want to get your input on this, is when I see refinancing numbers jump up, which has happened over the last few reports now, I got to ask myself, like, who in their right mind is refinancing at these rates right here? It has to be people that are just desperate for money. I mean, it has to be. And please put in the comments if it's for another reason. Maybe people are just, they want to do something to their house. They don't mind taking out at, 6 to 8%, whatever it is where you're at, kind of rates and stuff. But I just can't imagine tapping my home equity at these kind of rates to do stuff, because stuff is still so expensive anyway on top of it. But, let me know what you think about that. Now, this is what I want you to do in the comments. This was a questionnaire put out, and I like to get real people to comment on this like yourself. And when you look at this talks about, how consumers have managed financial stress over the last 12 months. We've kind of talked about this over the last year anyway. And it does all incomes, and then it separates out high income, which is 150K plus, right? When you look at cutting back on discretionary spending, which we've been talking about, the Nikes and all the stuff you don't need, the Lululemon $300 pair of running pants or whatever it is, 37.1% of high income earners said they cut back, 43 overall said they cut back. And then at the bottom, it says borrowing more. For instance, credit cards, payday loans, 10.2 of the high income earners said it, and 14.1 overall. And then, of course, cutting essential spending, which is what you need, like medical and groceries, pretty decent numbers, 23.5 and 17.1. But what was even crazier was down at the bottom of that questionnaire, it says how many people making 150K or above went out and found a second job. And it was actually a pretty high number. It was actually right up there with the overall, which all income and stuff. So I want to know in the bottom, are you cutting back, especially on discretionary spending? Because we're seeing those stocks pump, right? Lulu and all those others, Ulta and all these different things. We'll see what Nike does here, bouncing off a stock chart, but that does not mean the company, as far as earnings and people really buying their stuff, is happening, okay? That does not mean that at all. And so I'm just curious to see that. And I'll tell you, I mean, full transparency, we live on a budget. I make sure we're on a budget, all right? I grew up poor. That's just how it's going to be, right? My wife grew up on a farm. We live within our means, right? And so that's something we take pride in. It's not something we're ashamed of. We take pride in that. I always teach my son, just because you have the money don't mean you got to let somebody rip you off. If somebody wants to charge me, for example, I've said it, and it sounds stupid to a lot of people. I used to buy a hot fudge sundae every Friday to treat myself at McDonald's. It was 99 cents, all right, before 2020 happened, all that stuff in my area. They want to charge $3 and like 27 cents now for that thing. I'm like, are you out your mind? It's the same freaking Sunday. And yes, can I afford it? Yeah, I can afford it every Friday easy. I can afford it every day. But I'm not going to let you rip me off, McDonald's. That's the way it is. All right? Same way I don't go shopping in Walmart anymore. I get them to deliver that stuff to my trunk because I'm not working for you, Walmart. If I do, I need a W-2. I'm not going in and checking myself out and bagging groceries. I did that as a teenager, and I got on a tirade there. But still, just want to know from you guys, and because you're real people. So we'll know, are the surveys true or untrue? I think they're true. That's just me. Now, talking about the market, okay? When it comes to the S&P, you can see right here, we've talked about breadth. Well, to show you it's real, S&P performance and breadth hit one of the biggest dislocations in 30 years, right? And I mean, I report on this Monday through Friday, the members, so this does not shock me one single bit this is going on. I mean, my goodness. But you can see, and this is what I talked about. If you look over here, we were heading down, right there when he came into like November of last year, where it was heading straight down, and the market was going down, and all of a sudden breath turned, right? And so this is what you need. In that box, it turned again. Over here, that was 2022. It did not turn. And so you're either going to have a nice move up if this market's going to continue to push towards 5,600, 5,700, all that crazy mess, or it's not going to happen because those 7 stocks ain't going to carry us up there. You have to have, for those big moves, you have to have the other stocks participate, okay? And we've seen rotation into other sectors. Like this one right here, for example. Software, cybersecurity had a big day today, right? And software's kind of been hammered because there's this debate on, is it going to be hardware or software that's going to be carrying the torch and everything? And hardware has gotten a pretty good pump. And when you look, obviously Palo Alto, we talked about this yesterday, boom, it broke out, trying to fill 2 gaps right there. 349.61 would be the first fill if it gets up there to completely fill it. Then you're talking right around like 361.85 would give it to your second fill, maybe 362 right there. And so keep those ranges in mind. If that continues, Palo Alto obviously is giving a lot of people a headache, especially in our Discord. They played it, made money, then it keeps pulling back. We didn't get no retest though. That's what we were looking for, right? For that freaking retest. It did not retest when it pumped up today. So again, it just took straight on off right there. And so, we'll see if we get any kind of pullback on Palo Alto or not. PANW right there. Again, congrats to whoever owns the shares. Congrats to whoever's in calls. All that good stuff. Happy for you. Glad to see it. So, these ascending triangles, you're seeing a bunch of them and a bunch of breakouts, right? Amazon, Tesla, PanW, okay? And Datadog is another one somebody was talking about in our Discord today, and I put this together. And, you got the 2 paths, right? It's either going to break out of this descending channel right there finally, which is at the top, or obviously breaking back down and come down to the bottom of that channel. But when you look at momentum, I mean, momentum's there, right? So the stochastic where it wants to be. RSI is looking good over the 50, over that moving average. So that one could continue to take off. Snow's another one, which I know people are starting to make money on. This one's been a disappointment for a long time, right? And it finally, once it broke down that trend line, it was like, see you later, gone. But when you pull up momentum, stuff like that, you can see it had what? Bullish divergence on the RSI. You have higher lows on the RSI, lower lows on the chart. So it's had 2 good days, and it came in this shaded area. This is kind of the last hurrah right here, right? It had bottomed twice right here back in May and July of 2022. So this was kind of it for this thing. And finally, there you go as usual. No matter what's going on with the numbers, no matter what's going on with the company, you start to get a bounce. Is it going to hold? That's what we're going to have to find out, right? So we'll see if this happens or not. When you pull up like, there's no point in pulling up like moving average or anything on this thing. This is a hot mess. But, we'll put a trend line here to see if you get a major breakout. That'll be the 3rd touch. Or do we reject and come back down for more liquidity? Or when you look at the volume gap on this thing right here, you can see that it definitely has, an easy move up in a way. When you look at that right there, you can have that volume gap right there. And so it could move through that, which will bring it to that trend line. Again, you got fair value gaps all up there. They can be drawn on liquidity and stuff. You pan out a little bit. And you can really see where especially a lot of resistance will be between like 142, 160 area right there. But until you get there, it could grind up, especially if it breaks across that trend line right there. And when it comes to semiconductors, instead of breaking out each stock chart, just look at SMH. You understand why, and really track this one if you want to track semis. And I'll tell you why in just a second. But you can see it came down, filled that gap to the penny. Now it's just consolidating sideways, right? If we continue, to see, maybe we get some strength, right? If we get some strength, you can see right up here, there's liquidity to be had right there with that daily fair value gap. It can move right back up in there. But if it stopped there and started to roll over, what is that? That will be a lower high right there. And so that's what you want to see on the daily if you're wanting to see semis go high or higher than they are right now. But understand July is usually rough for semis, especially after this big move. And MU reported, somewhat disappointing earnings, stuff like that. But when you look, if it comes down right there, that's another area where you're talking about a gap, daily fair value gap. So perfect timing. And more confluence would be, if that happened, you would have the 50 and the 100 somewhere up in that area as well. And I'm willing to bet money if I pulled a fib up on that, it's going to be some major fib level as well. But again, this one's gotten super overstretched. It was like 45% overstretching that 200. The last time this happened was right here. Same number. And you saw the pull down, right? Broke the 50, bounced on the 100. And so this is not a surprise, again, with NVIDIA and all these big run-ups. So don't be surprised if you maybe see a pump and then a dump or whatever mid-July, but let's see if that happens. And the reason why only 3 stocks matter on this, NVIDIA, Taiwan Semiconductors, and Avgo. As you can see, I'll zoom in on this for you. But if I do my math correctly, 44% of that ETF is 3 stocks. NVIDIA, Taiwan Semiconductors, Avgo, right? And I think it's like maybe 7 stocks make up top 50, 10 stocks make up 75% of it. Okay, so, you know, and somebody was asking about Avgo with some levels and stuff. This is another one. If it continues to show weakness, which it has, it can come down and fill that gap right there and bounce. But down here, you get a lot of confluence, okay? A lot of confluence. You got 1, consolidation, 2, a trend line, 3 and 4, you got the 50 and the 100-day moving average going on right there. And so there's a lot of confluence for a bounce if it continues to show weakness. That's only like 8% away, by the way, if it came down and did that. And it's not a straight shot down, of course, but I'm saying in that area makes for a good buy zone if that's the case and we're not in some huge, you know, market correction or anything. Now, shop update on this one. Starting to build out some structure here, right? Again, we talked about this a few weeks now. We tested that level. We held the level. So what are we trying to do now? We're trying to break through this right here to set what? A higher high. Because we had a high, a low, a higher low, and now we're looking for a higher high right there. Again, that area is going to be a beast to get through. The 200 is there. A lot of resistance is going to be there, okay? And so the 100 is going to be there. So again, the 50 is starting to try to curve up on this one. But that area between 68.45 and like 70, it will most likely be a beast for this one to get through, unless it has some crazy news where it gaps up one day or something. But here's the good news. We didn't get faked out this time. The MACD finally crossed over what? The 0 line. Remember how we got faked out back here, right? So I said don't front run this back here, and it rolled over and kept selling off. Now it is above the 0 line. That does not mean it can't curl back over and go back below the 0, but it is over the 0 right there, which is a good thing. And so, you know, when we pull up, you know, we'll pull up the RSI right here, for example. You can see this one right here, obviously above the 50, heading in the right direction, above that moving average on the daily time frame. So it doesn't have super amount of momentum, but it's moving in the right direction. Just watch for a higher high to be set. Now, IWM, good day today because, you know, the 10-year did sell off a whole bunch. This one's trying its best to hold above 200 right here, as you can see. But again, it's been basically just a hot mess at this point in time. I mean, we'll see if this is going to hold or not. When we're looking what's happening on like a lower time frame, if we go over to say the hourly and stuff, on a shorter term time frame, starting on the 17th right there, you can see we started to somewhat move up and start to base out some structure here, right? We did a low, a high, a higher low, right? Move up to make a higher high, move into this area right here. We're like, okay, liquidity here. It moves back down to support, another higher low. And so what are we trying to form? Another higher high. Just trying to build this out and get above 203-ish right there. You want to see it get tested right there and then continue to move. And you can see it's kind of in this channel. It's right there at the midline, also setting at the 50 and the 100. So it's really setting, when we look this up, for a nice pop, right? When you start to get the compression, like you saw on Tesla, compression, but that compression took forever. But when you see that compression, and then you start pulling up, you know, momentum indicators and things like that, like your RSI, like your stochastic, and you're like, okay, it's about to get over the 50 on stochastic, trying to get over the 50 on the RSI. So if these can push through, right, and you want that stochastic up there around 82, RSI above 50, that combination, you can get a decent move, okay? And so we'll have to see, because remember, as I just did a video for members today, we are finishing what? We're finishing the Russell 2000, reweighting, bringing in new stocks, dropping new stocks, all that fun stuff. So that is over now. Fixing to start heading in July, okay? And so we'll see, but you can pull out on a weekly time frame. This is what you need. If you can get that stochastic to turn up on the weekly right there, and the RSI on the weekly above 50, which it is right now, but it get above the moving average, then you're cooking with Crisco, brother. Let me tell you right now. That's what you got to watch for. Now, when you look at stuff tomorrow, a lot of data tomorrow, right? Core PCE, personal income, personal spending, Chicago PMI, University of Consumer Sentiment, inflation expectations. And when we look at this, you know, you can see most of the time we hit core PCE expectations, but there has been times we have missed, but it's few far and in between. When you look at this right here, going back all the way, really, this goes back to May of 2023, or sorry, June of 2023. You know, most time it's hitting it. And so you can imagine tomorrow, if this comes in as is, then the market's going to be free to move up. There's a huge, like 4-hour fair value gap way up there. And if it comes in that, try to have that draw on liquidity, you know, that's like 1.5% up, I believe, on the Qs. And so, or at least on the futures, when I look at NQ, that is, then, you know, that could be the draw. And that would be a big move up. And it wouldn't surprise you. Now, if we come in super hot and yields spike again, well, it's probably off the table. All right, so it's really just depending on this, but we'll see what happens. Again, a lot a lot of news coming out. Just expect a boatload of volatility, that's for sure. You've seen going into this week and everything. So anyway, hope you guys got some out of it. Please put any questions you have for Saturday's video down in the comments. I'll try to answer them the best I can. All you already submitted questions, I really appreciate that. Please hit the like and subscribe button on your way out. Feel free to sign up for the membership. Less than a McDonald's combo, guys. You get a whole lot for it, let me tell you. So anyway, have a good one, guys, and I'll see you later.